Hello guys, in today's video I'll be diving into the second entry module, and that is the decisional POI mitigation. By the way, by POI I either mean an order flow or an order block. It depends with what the trading range has given. Alright, so without further ado, let's dive in. And to this chart, we can clearly see that this one here, the major inducement is taken out. You can clearly see that. And also price went further, taking out an additional sell side liquidity right here before reversing. You can see right here, price has taken out the major inducement and took out another sell side liquidity before actually reversing and breaking past our swing point. We all know that once price does such a pattern, this one here is a valid break of structure. This one here is a valid break of structure to the upside because actually the major inducement is taken out. All right, so this one here is a swing point as well as this, and we are currently in a new trading range, with this one here being the low of our range. All right, we all know that once we have identified our trading range, the next step is usually marking the inducement. So right now here on our trading range, where is our major inducement? Exactly right here, this here is the inducement. In fact, the major inducement right there. And price has not yet taken that, so we don't need to tie ourselves marking the POIs if price has yet taken the major inducement. So right now, let me run price and see what price does. So right now, if price creates another pullback on top of that, then the major inducement shifts. But right now, we can clearly see the price is heading down. So this means our major inducement holds. And exactly right here, the major inducement is taken out. If I extend right here, you can see the major inducement is taken out. This means then we have confirmed the swing point. We have just confirmed the swing point, which is this one right here. So this one here is our swing point, meaning now if price reverses and breaks past that, then that's a valid break of structure to the upside. All right, so this again means now we have just confirmed our low and high of our trading range. So now I can just plot that fib to know the discount and premium of our trading range, and exactly right there, that's the high, and this one here is the low. So I've just confirmed my swing point, my trading range. Yeah, exactly, my trading range or impulsive move. So right now, this is the right moment to map the order flows and the order blocks. The order flows are primary, so those are the ones that I usually start with, or we usually start with. And starting from the extreme, as we usually do, I can see this one here is the order flow made up with all that long wick. And exactly, let me change the color. All right, so that's the order flow, and you can see there it's mitigated. Coming up to the next right here, it's also mitigated. There is no need to mark this, so the one that I'm marking is this selling move right here, selling move before the buy, and you can clearly see it's also mitigated. And we say that this order flow that comes after the inducement, or not after, before the inducement, we usually don't mark this because this is a smart money trap. Like price has yet taken the liquidity, so why are we actually marking that? So that's an automatically a smart money trap. And right now, since all the order flows are mitigated, we all know that once that happens, we usually shift to the secondary option, which is obviously the order blocks. So right now, let me delete, or let me just change the color of our rectangle so that we can know which order flow are we in. All right, so starting from the extreme, I have showcased this on how to mark the order blocks. So we usually start on the extreme and mark the candle that is associated with a fair value gap on the extreme of that order flow. And I can clearly see this candle right here, and it's also associated with the fair value gap, and it is on the extreme of that order flow. On this order flow, there is no any other value pullback, so I'll be shifting to the next order flow, and this next order flow has no any candle that is associated with a fair value gap, so I'll be shifting to the next order flow. This candle was associated with a fair value gap, but it's mitigated, so obviously I'll be shifting to the next candle, and which is the next candle exactly right here. This one here is the next candle that's associated with a fair value gap, so meaning now that's the decisional, because this one here is the candle that is associated with a fair value gap on this I mean this order flow that is before the major inducement, because that's, you can see this is the order flow that is before the major inducement, and we said that we usually ignore this as well as the order block. So I don't see the reason as to why I'm marking this. So let me just delete them, because these are just smart money traps I'm drawing, and it's always not a good idea doing that. All right, so right now I have the decisional order block as well as I have the extreme. Anyway, I have forgot one thing, and that is the engineering liquidity. And I say that we usually mark the engineering liquidity if it's present on the range. So right here, where is the engineering liquidity? You all know the engineering liquidity is the liquidity resting below the valid pullback right before the extreme POI. And right here, I can see this one here is the engineering liquidity, because that's the valid pullback that is right before the extreme POI. And the POI in this case is an order block, because the order flow is mitigated, and this right here is the liquidity resting below that pullback that is right before the extreme order block. All right, so right now I have marked my POIs as well as my major inducement and the engineering liquidity. So right now, let me run price and see what price unfolds. Exactly right here, price is heading all right here. Price has mitigated the decisional order block. You can see this is the only order block that is right before, right before the major inducement. So this one here is the valid order block. And if I get a reaction from the decisional order block, then that's valid. Why? This here is an additional thing that I said on the first entry module, that if price, the selling discount and buy, selling premium and buying discount. And since right now we are currently bullish, we are buying, so we'll be buying in discount. And this here is our discount zone, as well as this one here being our premium zone. So right now you can see the decisional is exactly below the equilibrium of our range. So this means we are at the discount zone, as well as this and the engineering liquidity. So right now, if I get a good reaction from the decisional, I'll take this trade, because the decisional is on the discount and we are buying in discount and selling in premium. So meaning now this one here is a valid buy if I get a good reaction from here. So right now we can see sellers, we are the dominant, we are actually dominating. And right now, after price has mitigated the decisional, we are currently seeing that the buyers have stepped in. So right now, let me see if price, what price does. All right, exactly right here, price, the buyers have stepped in and have created this small body candle to the upside. Right now, I'm just waiting a good candle to the upside to form that morning star pattern to confirm this buying momentum to the upside. And now that's the right moment to play or to get into the trade. All right, and exactly right there, this here is the candle. Price has just created that candle exactly right there, and this here was the right part. The perfect moment to enter was this one here. After this candle has created like this, and this one here was the perfect moment to enter exactly after the morning pattern has formed. Stop loss just below here, a few pips below the pattern, and then target the external liquidity right here. You can see that's a good risk to reward. I know some of you will have extend this to get that 1:3. Anyway, it's a good practice, but not something that you should be recommended. If the 1:3 was to be like something big, you would have extended that a good, like a big distance, a big distance above the external liquidity. So if it's something, let's say right here, I think now that's reasonable. Yeah, you can do that, but it's always good to just place your stop loss, your take profit on the external liquidity. Right now, you can clearly see everything is good, and yeah. So let me run price and see what price eventually does. And right here you can see price is heading onto our direction or onto our favor, and I'm pretty much hoping the price will make it out to the external liquidity. And exactly right here, price made it out to the external liquidity real quick. And this is the second entry module, decisional POI mitigation. So guys, I hope you have enjoyed the video. So drop a like and see you in the next part. That is the next entry module, and that is the engineering liquidity sweep. See you there.